This week, a day of reckoning is coming for older Americans, and here's why. Welcome back to the Industry Leader Update. A credit card day of reckoning is coming. The stimulus payments have stopped, and inflation, it remains a persistent burden for all Americans. But more concerning is the impact of the Federal Reserve's series of rate hikes on consumers who are now holding a credit card balance. Data collected by CreditCards-com shows that the average general purpose credit card APR is 22.66%. and retail cards have reached an astounding 26% APR. Then there's the average credit card balance carried by older Americans, and that was before the Fed's rate hikes. Baby boomers carry an average balance of $6,000. The silent generation, those between the ages of 77 and 94, hold an average of $3,100 in credit card debt. Now, the key words are average balance. That means each of these individuals is seeing higher interest rates and more interest rate charges, which slows down the payment of their principal balance. The demographics show that the older generations are in fact far from debt-free. Adults age 50 to 59 hold 22% of total American credit card debt, and that's the most of any age group. Those 60 to 69 hold approximately 17% of all credit card debt. Now, the long-term effects of inflation and debt will have a significant impact on retirement preparation. Allianz Life Insurance Company's 2022 survey found that 40% of baby boomers have either reduced or stopped saving for retirement altogether. And that means future retirees will be less prepared to retire, and those that do eventually retire are going to have to postpone retirement to help ensure their nest egg lasts during their non-working years. The current debt crisis, also coupled with historic inflation, leaves just a handful of choices for today's older American. Find other sources of income, work longer, draw down 401k and IRA balances faster, or tap into other assets. Homeowners with significant value may be able to pivot into a less vulnerable position by utilizing a portion of their home's value to help boost their monthly cash flow. Just the mere elimination of required monthly mortgage principal and interest payments alone with a reverse mortgage, that could increase one's cash flow by 25, 30% or more. Not to mention paying off credit card balances, which stops the interest accumulation and charges. That also further boosts one's spendable income. Now, when it comes to debt, American consumers, they're particularly headstrong, and they choose to continue spending despite dwindling savings, oftentimes by using their credit cards. Give you an example. Case in point, despite raging inflation and higher interest rates, Americans bought more on Black Friday online, hitting a new record, expected to top $9 billion in sales. The adage that all debt is bad is a worn-out trope, but a more accurate representation would say that the debt that eats away at your spendable income or cash flow is the most onerous. Those burdened by consumer debt and who may qualify for a reverse mortgage will in fact have a day of reckoning when their payments, credit card payments, become unbearable or their credit lines are maxed out. Do I continue to suffer under the burden of high interest rate debt and required monthly payments, or do I look to other assets as a potential source of relief? That will be the question. And when that epiphany finally hits, it will really depend on the individual's tolerance for financial pain and their willingness to admit what potential solutions are in fact at hand. Now, what are your thoughts? Leave your comments in the comment section below. And if you'd be so kind as to share today's video on your LinkedIn and Facebook profiles. Don't forget we have a YouTube channel. You can subscribe and hit the notification bell. That way you never miss an upcoming episode. And hit that like button if you really appreciate the work we put into this each and every week. And speaking of every week, we have our podcast that gives you the most relevant and new reverse mortgage stories. That's HECM World Weekly. Apple users can listen and subscribe on iTunes. That's a wrap for us. Until next week, we wish you luck. We wish that you win in today's challenging market.